3 weeks into February and I must be at like $9,000. So in this video, I'm gonna show you how I do it, what I could have been doing better, because there is some mistakes and there is some missed trades, and how you can adopt this method to stop over trading, stop hesitating in your positions, and overall make more money. I know this doesn't look as sexy as you want it to be, but do you want money or do you want to jerk off to 10-hour trades that at the end of the day, even if you get them, you're still not profitable? We're going to be looking at EU and GU, analyzing everything throughout these 3 weeks. As you can see, we got the first position here at the 2nd of February. You can see how we sweep this inducement. And as we do so, you can see how we're still in the middle of New York session. So you do want to anticipate for a smart money trap. So as we do one sweep and price goes up, you don't immediately jump in too early. All right, because SMC traders are also watching this. ICT traders are on it as well. So they're going to position their orders here and then boom, they're going to get stopped out. They're going to get stopped out. So now we have made a liquidity sweep. We have made a smart money trap, and it's London close session, which tends to be a retracement of the day. So if we had London bullish and New York bearish, well, we're just going to do the opposite of what New York did, and that will be a bullish move to another trap, right? Because you got to remember of the smart money trap cycles. The same way as this was a trap and this was a trap, this low was a trap, so now this would become a trap. Basically saying that because support resistant traders, or SMC traders to be exact, had a initial bias of we sweep in liquidity, we're going to be bullish on this order block, and we failed to respect it. Now they're saying, oh, we're not actually bullish, we're actually bearish, so let me short it at this point. But as we all know, they end up getting trapped again and again, as always. All my accounts are connected to TradeZella, so here you can see the trade on one of the accounts, and I also took it on another account that looked like this. And on my Discord, of course, I was already sending the analysis for a trap on EU, which basically corresponds to the same thing happening in GU, as they're super correlated between each other, and then the XY doing a trap on its gap as well. So then I put down the signal, as you can see, with the trap on M1 or M5 in this case, boom, boom, with the buy at the exact spot, and the TP hit, and Ronaldo chilling. On that same week, there was actually another trade that was possible. So now, as we take this liquidity and there's this liquidity underneath, you already know that we go from one liquid to another. So as we sweep one, you try to look for the other. Right now you got the sweep of this, you're trying to look for this, but it was during London session, which I no longer trade. It's still possible to do so. You just have to wait for a trap as you do so in New York, but New York tends to move a lot more. Just adding more hours to my trading routine and not having that many results, especially not many trades. I just feel like trading London is very unnecessary of me, and it might even cost me money. So in this case, I didn't took it. There was a double sweep on London if we zoom in, right by the second week here. And could almost have a 3R, but then I would be tagged out break even here, and then price would follow. What I was expecting here was for New York to sweep it. So then took this one, keeping it realistic with y'all, not even putting trades at 10R as I could here like some other YouTubers. But yeah, going along the plan, I don't trade London, I go for 3R. That's about it. If you continue, we can see that there's not much action in here. And I'm not even trying to trade these lows, as I got an efficiency down here. And these are all like, okay, very end of London close session, Asia session. There's not much to trade in here. And then boom, first loss. There's also losses, guys. Don't just expect me to deliver you winners and winners. So here, again, it's pretty simple. We just had that initial drop that left an inducement here. So you can see that it basically done this. This high didn't test, no liquidity, didn't take no sort of liquidity. So we're left with this. You can see by the M15 candles the same story, as you have one candle sweeping it, doing a reaction to the downside and doing another reaction to the upside, meaning a double sweep, smart money trap, quote unquote. And then once again, you get to this salmon, or whatever color this is, little pink, kill zone of London close. So end of the day, you got London being bullish, New York being bullish, London close will tend to be a bearish move. Okay, so here's the trade on TradeZella, and as we approach another day, you can see that we left this liquidity behind. We basically just had one sweep of it, and it was on London session, not even just London session, but New York chart timing, so the hour between London session and New York session, again giving you more sauce in here, which tends to either build traps or be the trap itself. In this case, it was the trap itself, as it swept the highest point of local London morning. So then it delivered the whole move, but New York could have easily come back and sweep it, and then perhaps you would have our position with a double sweep, with a trap. But yeah, basically going from one liquidity to another. Again, I could have put in a trade here just due to the fact of the liquidity sweep, but I'm not gonna do that. It's not conform to the strategy nor my vision. And then we have another trade that I didn't take. I knew that we had to continue the bearish move, so I'm giving a priority to the short positions. It's just that this was a little bit too internal. This was just off an inducement, and I would much rather see this whole thing being swept and then short it from up here. So then I kind of hesitated. It was towards the end of New York session, and as soon as London close would hit, I would immediately position myself on the breaker structure, since it would have gave me that confirmation of having both London and New York being bullish. So then London close becoming a bearish bias. The only thing is, price went too quickly. I don't remember exactly what it was. I think it was some Greenland, either Greenland on some Iran news that caused this move to gap down immediately fast. Would have been beautiful. Then, as you can see, because this was a trap, of course, this will also be a trap. Don't just be trusting initial order blocks in that. If you don't know exactly how to spot smart money traps, go into the description. There's a link to my 5-hour course on how to trade smart money traps, how to spot them, how to trade them, and how to be profitable just off that. Not even counting a lot of concepts and confluences that would obviously make you even more profitable, but just off one single concept, just understanding the market like that, just understanding how to not be alongside the 99% of traders, you can already become profitable. Then on the next day, it's just basically following the liquidity principle. We're having liquidity being swept, right? Inducements being swept, continue, boom, boom, boom. Basically like this. Okay, I know this is a mess, but just remember, price doesn't tend to move simply like this, okay? Because that way, me and you would be billionaires. We would just have to short here, short here. Wow, pretty easy, right? But if it's gonna go down, that is most likely gonna do this. Boom, trapping people, sweeping liquidity, boom, and then going down. Okay? So in this case, kind of that. Here, didn't take it. Why? As you can see, this blue box represents London session. There was a sweep of the previous daily high, which is a major liquidity. One sweep goes down, two sweep. You can see these rejection candles can also count as traps. It doesn't even need to be an exact sweep of liquidity, break your structure to the downside, and then going back higher. Could just be a sweep of liquidity with a huge rejection candle, and then price will tend to sweep it again. This will happen in a lot of times during news events. So you see some sort of news deliver a huge move. This could be NFP, could be CPI. You can see that it will do some rejection, then it will slowly come back up, take out everyone that has their stops in that specific rejection spot, and then price will deliver the move that everyone was intending to do. But would I trust this? Depends. If we were on New York, if we were on London close session, maybe. But I'm gonna be honest with you. I'll much rather prefer see this whole thing being swept and then going to the downside. Here's an interesting one. Just after this whole bearish move, we have had a trade here that was in a super risky structure, although still valid. Just before this win, I got myself fucked, is the exact term here. You can see how price is consistently going down, right after this rejection, and it kind of breaks this wick, right? This candle is breaking this candle, meaning in the 1 minute we sort of have a break of structure here, a change of character. And someone like myself was already tagged in here with a stop loss just below and out of the position. All right, so this is the sadness of stop orders, where they could just tag you in like this and then go immediately to the opposite direction. But the beauty of it is when you predict the exact close or the absolute exact highs, and price goes in your direction immediately. You can see in the 1 minute I had the entry right there, and it doesn't even look like much of a structure, but I had to be kind of mechanical about it, looking at the M5, and it was valid. That's the thing. I gotta stop being that hesitant, you know? It's confident to the trade. It doesn't look good. Discretionary wise, I could have avoided, but discretion can also hurt you. So you gotta remember to also be mechanical about it. Because I've had plenty of times where the candles looked ugly, but then they ended up giving me winners. All right? So even though this could have been avoided by using discretion, discretion can also tend to make you miss a lot of the winners. You'd be surprised sometimes by choosing the actual ugly ones that tend to be winners. And I don't mean ugly ones as unvalid trades, but just as like something's missing or there's something against you, but you know the trade can still play out. It's just that perhaps everything's good, but the entry points, the candles look kind of ugly, the structure doesn't look that right, and then boom, we got stopped out right here. Then, boys, right after we got stopped out, the trade still looks valid. Okay, we ended up going towards EU in this case because it looked a bit better and without such an ugly structure. We have had a sweep of an inducement out of this whole movement. I'm still expecting this red line to be broken, which I think it did right here, right? But in between that, we can still have reactions. And those reactions can give you winners. Okay, so in this case, we're just playing around a retracement of the whole overall continuation move to the downside. And so if we zoom in, we can see that we sweep a liquidity here, we sweep an inducement, but what we have to the upside is London session high, Asia session high, all valid liquidities as price just continues to go down throughout the whole day, basically. And so then we have London session going up, whilst New York session going down, sorry. So London close tends to be a retracement of the day, in most cases, which is the retracement of New York. So the opposite move of it, if New York was going down, then London close would tend to go up and go search for an efficiency with London price action. So it would like to close the session at least the same area where London close price action was at. All right, don't hesitate in going to my channel and watch the videos explaining all of this. I got plenty of sauce, right? I'm not just giving you basic ass shit that will not make you profitable. Then London close hits at the perfect spot. Boom. As soon as London close hits, price magically starts going up, right? Sweep of liquidity, London close session, perfect. I'm giving you a tons of sauce here. I shouldn't be giving you this, but hey, someone's got to do it, man. Someone's got to do it. But don't take it from me. Go to the markets, go to your charts, put a session indicator down, and actually watch this happening for yourself. So then with EU here, you can see how we had this sort of structure here, right? We're doing structures. I could even, if I zoomed in on a 1 minute, I could even position myself here because you can see how this high cost this low, okay? So we could have a position here. I just went a little bit more safe because I think the stop loss was already quite small. Yeah, 6.2. So if I think I saw this and this would have gave me like 4 pips of stop loss. So I said like, it's a bit too low. Let me go for a 6, be a little bit more secure, go towards an area which is actually marked on the M5, right on the M5 candle, which gives me more security, as the 1 minute can give you a lot of noise and a lot of fake moves. Okay, so then this trade was a 3R, but as you can see, you had the potential to be 6, 7, 8. The stop loss was quite small, and when you trade a liquidity strategy like this, where it's actual liquidity, and actually seeing people getting stopped out, not just support resistance traders, but SMC and ICT, as they make the majority of the population of traders right now, you can predict the market, the absolute highs, the absolute lows, and go search for crazy moves, bottom ticks, upticks of the overall day, and get crazy results from it, right? Again, I could have done this. I could have done this and make it beautiful, right? But this is the exact spot on where I took profits. As you can see right here, same trade, long on EU, 17th of February. Let's replay that. You can see that I was tagged in immediately on this candle, M5, printed on M5 like I've mentioned. Boom, going up, and it was super fast. It was super fast. I knew that this point was probably going to be a trap because it was the high that caused the sweep of liquidity. So now this sweep of liquidity has to deliver some sort of reaction. And so even if we're going to the downside, we have to at least sweep this liquidity, gather a bit more fuel, and then continue to head lower. And to finish everything off, we have the saddest of trades. One of the best spots to trade at. There is some trade here that we didn't discuss, but I didn't take it. You can see how it's overall in a risky zone, but going towards this equal high, pretty much self-explanatory. But yeah, you can see how we sweep an hourly level. So the more in the higher time frame, the more relevant the liquidity will be, of course, because then it will deliver a higher move, and a higher move, like even a smaller move on the higher time frames, can give you a big move within the day, and that move could potentially give you a winner. In this position, we not only had a double sweep on New York session, like watch how this candle swept the liquidity. It went up and then it went straight back down, and I didn't put a position here. Okay? I'm not scamming y'all. I didn't jump the gun here. Because if you heard me a few minutes ago, I told you, if you're in New York session, you do need to wait for a smart money trap. So you see the liquidity sweep. You see how it does a cycle here, change a character here. I'm not trying to position myself there because we're still in New York session. As soon as we do a trap on New York session, then cool. I'm going to be looking to place myself. And then we only 1 hour away from London close, which is perfect. Because the overall day is just going down. So London close will probably deliver a retracement of the day. And guess what? Guess fucking what? Okay? London close going up. But the saddest part is that we were putting the stops to break even. Then I actually traded a stop loss here because I had some accounts running crazy amounts of profits. And as soon as the market closed right here, I had some equity on prop firms that like they're balance-based drawdowns, but also equity-wise. So if you were running certain amounts of profit, they will basically say that your drawdown is right now a bit up. The crazy part is that if I got myself taken out break even here, I would have blown some accounts, even if I realistically did not lose any money. So I had to up my stop loss here. So yeah, this trade here paid me quite a bit, but yeah, could have literally been like a 10K, 12K trade. And yeah, pardon me for the organization. I'm not very good with this. I'm just delivering you sauce, and I'm forgetting about this. But here you go for the EU trade that we discussed a bit earlier. Right, I was even saying that the structure was ugly. Right before it. Right, you can see the timers. You can see the timer on fucking TradingView. I have nothing to hide. Right, buy EU. A bit late. The signals is not important. It's just for the students to know exactly where to position themselves on the live market, so they can take example of that, and then they can eventually predict the stuff that I'm about to send before I even send it. Easy TP, Tony Montana here, basically us chilling, and boom, you can see EU today, sweep off that red liquidity sweep, waiting for a trap now. Okay, you can see that the candle is even, the trap isn't even made there, and you can see the timer there. Boom, just waiting on the XY liquidity now, because it's also important to look at the XY, because it can show, EU could be telling you something, whilst the XY is showing you that the price will still deliver a trap on EU, so you got to watch out for that. and then boom, buy you right here just before it, putting stop loss to be, and then unfortunate stop loss, but you can see how the vision is quite well because eventually we went to the upside and would have gave us a TP if we didn't trail our stop loss to either break even or 1 hour. But like I've said, I have to, otherwise I would lose some accounts just off running some decent profits on a trade. So as you can see, not a lot of trades were taken, but in trading, less is more. I've done the aggressive approach of taking all the trades, the best setups, the risky setups, and trading with normal risk. And I'll tell you that being a sniper with much bigger risk is way more worth it. Okay, it's way more worth it. All right, so you can see there's not a lot of trades for my strategy. Trading EU and GU, there tends to be at least 1 to 3 high-class setups every single week. So you gotta be patient enough to wait for them, focus enough to not miss them, and be mentally strong enough to not hesitate and click the button as I wouldn't back in the day. So now after fixing those mistakes that I used to make back in the day, that you're probably making for a crazy amount of years, because I have close to 6 years of experience now, I'm teaching others how to become profitable traders in just a span of 3 to 6 months. We got some Forex traders, we got some futures traders because the strategy is applicable everywhere. You can see that because of the liquidity mastery concept, traders are doing ping pongs all over the place. As you can see, this can literally go crazy, from students doing $2,000 in 2 days, $10,000 in 4 days, right? You can see funded accounts here, funded accounts there, boom, 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 all real. And we also doing a leaderboard now, giving accounts to students, cash prices, various things to incentivize them to do better as traders. So if you think I can help you getting funded, click the first link in the description, see if you can qualify. And I promise you guys, as soon as you join, there's not a random teacher that I've selected. I'm actually the one doing the private calls with you if you decide to join. This is our current mentorship dashboard, and this is the one I'm building that's releasing pretty soon. But then again, only killers allowed. If you're still not familiar with my content, don't hesitate in go checking my free courses stuff. I've got 5 hours on how to trade smart money traps. I've got 2 hours on my full strategy. I've got 1 hour just dedicated to psychology. I've got basically everything. But at the end of the day, most people will need that small little push that comes from a mentor. All right? Just being honest here. I've had mentors. The other guys that succeed that I've spoken to, I've had mentors as well. Everyone has had mentors. There's nothing wrong from learning from somebody that's in a position where you want to be. All right? Hope you guys enjoyed. Please leave a like. And I'll see you on the next one, boys. Peace out.